All right, here we go. Thank you guys for being here. Thank you for the organization of the IFX. So it's a pleasure to share this presentation with you guys. The time here is also we're going to make the most valuable information for all of you. I'm not here to lecture you about trading basically, but to share with you my experience. I've been in the market since 2006 when Bitcoin is not even in the world. So I have enough experience to tell you my mistakes, what I lost, how much I did, with what, and the strategy finally. So my story is this. On my first year, I was using indicators, like probably most of you, chartism, all kinds of strategies. And with all of that, I lost $80,000 on my first year. Back then, I was in the US, and I got the chance to work in a hedge fund, in an FX trading desk. And there, I saw traders not using indicators, not using any of what I was using. So I finally got to the point where I was tutored by using only prices and price action only. So they told me how to read when you have a buy price and when you have a sell price, and to notice the difference on the opening markets. So you get all you get on 1 hour opening, doing a scalping, identifying when you have buy prices and we have sell prices. So that's all I've been doing for the last 15 years. And thanks to God, I live out of the markets, and that's all I do every single day. So I'm going to show you the basics of price action. We don't have that much time. So in 30 minutes, I'll try to get you to the point of understanding price action the best I can. I wrote a book that was like 5 years ago about the entire theory of price action, which I'm going to show you the cover so you can maybe see it in Amazon, or I think we have it in Kindle. So we're going to get started with the how to use price action in gold. Why not Forex? Forex is also great for price action, but I don't know if you've seen Forex for the last few months. You have a lot of consolidation going on, so it's not a good idea. Instead, gold, it pays a lot by pip, it pays well. So most of us, I'm sure that if you're trading, you probably own silver or probably own gold, which is actually, to me, the best options for the last, I'm going to say the last year or so. Okay, and why I say gold highs? Because I noticed many people losing money trading and trying to short gold. In price action, you don't short gold if you don't have the right setup, the right confirmation to short gold. You don't short gold just because of the all-time highs. So what I told to people, because I also run a live trading session, so I connect myself on the opening and people see my trading, they follow my instructions, and they see all the trades that I do, and I tell them, look, we have an all-time high today, we know where the stop losses are, so what we're going to do, we're going to place a buy stop at this price, which is a new high that the market was not even touching. So that once the buy gets triggered, we go with all the stop losses, and that's what make the difference. So we keep doing that for like 8 months, and the price of gold, it was keeping and pushing. So we make all the profit only out of the stop loss of the people trying to use indicators and trying to use the chart. Because that's a big question. How you trade gold when it's at the all-time highs? First of all, you don't short. And second, you have to use the stop losses of the people that is shorting, which is 80% of the market, because what are they using? They use indicators and the chart. That's all they're using, right? So you have to go the opposite way. If it is an all-time highs and you read the market, they're going to try to short, what you do? You buy. That's it. So you never short gold? Yes, I did short gold, but only when you have enough consolidation at the highs. So to me, shorting gold, it has to be a good price, ideally a psychological price, and I have to have the confirmation at all time frames. 5 minutes, 15 minutes, an hour, all time frames confirmed to the sale that I want to do, all right? So that's why I choose gold, because I knew that if you were trading gold for the last couple of months, then you're probably not even knowing what to do. Indicators are not helping. The charts are not helping. So what's next? Well, I'm here to tell you what is your best next move for your trading career is probably price action. All right? So let's get right into it. So basically, it's the trading system focused in prices. So prices comes first, and then you have all the chart, because you read it the wrong way. You read the chart thinking that it's going to move the price. But it's not right. You read the price, and you understand that is going to move the chart right after. It's totally the opposite. So it's really the mindset. You have to be ready to know what the offer and demand is doing on prices, and that is going to, therefore, change the chart. So let's start with that basic idea. So then, like I said, you have buy prices are not the same as sell prices, right? Understand the true nature of interest of buying and selling. Charts, indicators has distorted traders' visions of the market for the last 30 years. You all read the technical analysis of Murphy or candlesticks or whatever you want to call it. That's old school, you guys. That's old school. There's nothing new that you can get from those theories as trading today, thinking on the future. You have to be way in advance of what the chart is doing and what everybody else is doing. And most of the time, you think in the opposite direction, the opposite way. So this is the problem right here. 70% of daily traders lose money. Why? Because they had traditional trading systems. 90% of indicators missed out perform gold index since pandemic. 30% of daily traders manage price activity and have winning rate using prices on. So you're going to be part of 3% of the winning rate if you manage prices correctly, or at least the way I'm going to transmit it to you now. Stop loss. No real understanding how buyers and sellers interact over prices. I don't use stop loss, and I'm sorry, I don't use stop loss. I go for the confirmation. Who else is not using stop loss? Anyone not using stop loss? No? No? Well, yeah, kind of sometimes. When you're scared. So I'm sorry, but stop loss is not the way, you guys. I mean, if you think how the market thinks, and the volatility, once you enter the market, is it normal? It's okay, it's fine, But you have the tool that if the price that you enter loses the confirmation, you get the chance to get out of the market, only if it is really exposing you to the wrong, interaction. Otherwise, just deal with it, have exercises. I do have a lot of exercises that I can also show you how to manage your situation with fear. Fear of the market, that's all. But volatility, you had to get used to it. Otherwise, you're going to be stuck on a stop loss for a long time and not making any profit, I'll tell you that. But the broker will be very happy. We know that. But not you. All right, so, well, that's, like I said, the main thing here. All right, so the time frames, also a very important thing here, volume and time frames. So how about volume? It keeps moving. The volume, you don't need any indicators, right? And that's the main thing. For volume, it's not going to help you to make any decision. Volume indicators. So forget about volume indicators. The only volume you care is the candle. You mean the candle? Yeah, the candle. That's the fastest way to know you have buyers or sellers on that 15 or 5 minutes time frame. I'm more into the 15 minutes, but then I can go to 5 minutes if you have news coming up. For example, today on the NFP non-farm payrolls, I may go down to 5 minutes. If the volume is good enough for news, then 5 minutes is good. Otherwise, 15 minutes. Okay? So volume, why the volume? On the candle, that's it. You don't need anything else from the chart. Just the information on the candle, where the candle opens, where the candle closes, and what is inside of it. Volume. You got the buyers and the sellers. Everything else is just the brokers giving you information or delayed information, but it's not going to help you to take any good decisions. So, commodities and indexes can only be traded in short after 3 shortened sessions. And that's the point of having short strategies when you have all the market buying silver or the market buying gold and you're trying to short. If nobody's taking profits out of their long trades, then why are you shorting? You have to make sure that you know and you understand when the market is trying to get profits. And that's when you're going to have sell confirmations. Like I always say, the market is not going down because it's at all-time highs or because it has to go down somewhere, at any point in the future. There's no logical sense on that. So the only way I short is because I have enough liquidating people, their long positions, their long trades, that gives me room to short. And that most of the time is going to happen at the end of the trading session, So the market opens, they buy, and if they take their profits out of the market, then I'm going to see short positions at the closing. If I had to suggest you what the best time to trade for the scalpers and day traders, you got to do the opening. The opening of Europe, which is quite aggressive, or the opening on the US, which is going to be on this time at 5 p.m., 5:30 p.m. That's a good time for the opening. If not, the European opening. So 1 hour of the opening, that's all you need. How many trades you can do on the 1 hour opening? If you scalp the markets, maybe 5 trades, 6 trades at the most. Sometimes you can do 10 trades. My record has been 25 trades in 1 hour because of the volume. But on average, 5 trades at the opening hour, that's good. You're set, do the opening, and then just leave the market relaxed until the next day. Of course, you say the news. Well, I trade news too. News are great. I trade news before they're getting published in the calendar, but that's another story. I'm not getting into that thing now. It's going to be a lot for you guys. But I trade news, and today is the NFP, so okay. So basically, if we take the advantages and disadvantages of price action. Advantages: real-time interaction on buy and sell prices. A daily use is useful for bull and bear markets. The prices discount everything that is seen and not seen in the market. Opportunities are based on macros and no macros as well. So this is a really good point here. Prices discount everything, what is seen and not seen. So if the market goes into buyers and buyers and buyers and no news are coming, probably something's going to happen, right? So gold keeps pushing, and no news, something's going to happen. That means the price is already absorbing and discounting everything that's seen and not seen. So I don't need to see if the the NFP, the non-farm pair is going to be good, or the interest rate is going to be good or not. I have to read the price. Trust me, institutions, they don't wait for the non-farm payrolls. They don't wait for the Fed. They don't wait for that. They know already. They know the next move. So you have to be able to read the next moves of the market by reading price activity. Now, what are the disadvantages? Well, emotional factor, not using stop loss. It will drive you crazy at first. It's going to get into your nerves, right? But then you get used to it. You know the climber, this guy that climbs all the buildings, I don't know the name. And once somebody asked him, how you manage fear when you're that high? You know, how you manage your survival situation, your emotional. And he goes, well, I've been in fear situations for so long, and like a lot of times that I get used to the feeling of fear that it will not interrupt what I'm doing. And that was only giving you the experience, enough experience in the market. So you're in fear all the time, so you get used to fear, so it's not interfering with your decisions. So what I'm saying is like, get used to it. Don't avoid it, you know? Just make it part of your trading system as well, okay? That's a tough situation. That's the sweet point where you know you're in trouble. You know you are in trouble. But you stick to what you know, and you trust yourself. You have to talk to yourself like you're talking to somebody else that's really good. And guess what's going to happen? At the end of the year, you're the best trader in the world because you trust yourself, nobody else. And that honestly has been saving me my life, you know, because I don't need recognition for no one, just for myself. So now, no long-term. Well, no long-term. Price action is not long-term. Don't go for long-term. Forget it. I mean, if somebody's asking me what is gold is going to hit next as the next high, I don't know. I don't do predictions. That is the job of JP Morgan, those economists, those people, they do that. I don't do that. I don't know. I know when they're buying, I know where they're selling, and what am I going to do with that situation, with those prices? I don't know how far it can go. No idea. So no long-term. Price action, it is not for long-term. We use the information that is already happening in the market, but predictions are for people that is actually an expert on predicting, you know, the projection on prices for a year, for 2 years, right? I had only 8 minutes. All right. So prices reveals what indicators and charts tend to hide. So the famous overbought and oversold situation. What indicator give you the oversold and overbought? What is it? Any indicator that gives you oversold and overbought information. What is it? Which one? The RSA? Yeah, exactly. So like that indicator or like the RSA or those indicators that give you the overbought and oversold in price action, there is no such a concept of oversold and overbought. The oversold, if I see the market is just shorting and shorting and shorting and selling going down, what I'm going to do in my head is I'm going to use 80% of the traders that are losing money trying to short when there's no one buying. I know where the stop losses are, and there I'm going to keep shorting. I wait for the buyers, reading indicators, reading the oversold situation, oversold indicators. I wait for them. I place myself right on the stop loss line. I make my profit. And I keep doing that. I did that in the war of Ukraine and Russia. I did that on the 2011. On every crisis, the price goes down and down and down and down. I use the stop loss of everybody else. That's how you make the profit. Martingala, forget about him. Is somebody used the Martingala here? You know Martingala? Please don't use Martingala. I mean, brokers are happy with them. Martingala is not the way to go. Martingala means the price goes down, you buy. It keeps going down, you buy again. It goes down, you place more buys. And well, that's the opposite of price action. If the price keeps going down and you do not have any buy confirmation, all it takes for you is only to lose money. I'm going to use your stop losses, your information of indicators, and I'm going to do the opposite as you. The same with the oversold, with the overbought situation. Like gold, for example. Gold pushing and pushing and pushing. And I know where the stop loss is. I'm going to wait for the stop loss and I'm going to buy. Again, pushing and pushing, pushing. I know all the sellers. I'm going to be buying again because I know the overbought concept means nothing for the market. They don't care. What is overbought? Who cares if it is overbought? It means no selling for sure, no shorting for sure, and that's a fact. So like I said, volume, very easy. You use just the volume on the candle, and finally, buyers and sellers are the participants of moving markets. Charts go after and not above your trading decisions. So first you need to know is how the market opened today for gold. You know where gold prices were today at the opening of European markets, for example? 50-50, around 50-50, 5,050 today. So what I know is that Europe was holding the buy transactions on gold. So I cannot short gold yet because the market is really pushing from the 5,000 towards the highs. They hold buys above 5,050, going towards 5,060. I cannot short yet, but I'm not sure if I'm going to buy. What am I going to do? I'm going to trade the non-farm payrolls today. I'm going to wait for the US to open. I'm going to see what confirmations I have before the news comes up. I know the employment of the US is stagnant, so they're not really doing any changes because of the non-farm payrolls. I'm going to wait the confirmation possibly to keep buying gold today. If the price is above 5,060, I'm going to keep scalping up to 5,080. Otherwise, if I have the confirmation before the NFP, it means the market is going to buy the dollar and short the euro, short the pound, and short gold. Guys, this is too much to give in only 30 minutes, so I really have to leave it here. But like I said, you can find me on Instagram. I have plenty of information also in my website, my YouTube channel, which is Watch My Trading. I don't know if you can see it on my jacket. Watch My, oh, that's the website right there. By the way, this jacket, my friend from Argentina, which is here with me, just did all my branding. Thank you guys. I had no time, so I'm just gonna thank you for this time. I'm out.